Hello, my fellow traders. My name is Kalis and I'm one of the market analysts here at HF Markets, and I'd like to welcome everybody to another live trading session. Today, we're going to be looking at the NASDAQ. The reason I've chosen to look at the NASDAQ is because tomorrow the Federal Reserve will confirm their interest rate decision. And it's most likely going to be either a 25 basis point or 50 basis point rate cut, according to economists and most market experts. So because we're going to see an interest rate cut, there's a strong possibility of a lot of volatility over the next 24 hours, but especially after tomorrow's interest rate decision. So this is why we're looking at the NASDAQ. Now, if we look at economists, a lot of economists have said that if we do see a 50 basis point rate cut, which is considered to be significant, quite large, then it can potentially have a very strong positive effect on the US stock market. However, if we do see a 25 basis point rate cut, then it could actually have a negative effect. Why? Because it is something which has already been priced into the market. For example, something which the market knows very well as basically purchasing and positioning yourself based on rumors, but then selling the news release itself. But we're going to be looking at technical analysis for the moment to look at where potentially technical analysis will provide us with signals. Now, if we look at the NASDAQ here on a 2-hour chart, yesterday we did see a retracement. It was the worst performing index yesterday, but I want people to be fully aware that even though we did see a retracement, you can see based on the swing lows, the lows are still significantly higher consecutively. So now that we are seeing higher highs and we are seeing higher lows as well, it's all about whether we're going to see a breakout of this level here. Now, the difference between the current price at the moment and this resistance level is approximately 0.20% to 0.25%. So if we are going to aim to that resistant level, then of course it will be considered as a potential trade that we will aim for it to hit the take profit within the day, because of course it's quite close to the price movement. Now, if we're looking at the indications on our chart, we have a trend line here, which is basically a 75 bar exponential moving average. And then we've got a price sentiment line here, and we've also got our relative strength index. Now, we can very clearly see that as the trend is increasing upwards, we continue to find support at that trend line, like we saw yesterday evening. So as we remain above the trend line, we remain above the price sentiment line as well. And we're also currently trading just above the 60 mark on the RSI. We can see indications on the 2-hour time frame is towards a bullish bias. So basically that buyers are currently controlling the market. Now, that doesn't mean, of course, it cannot change going forward, but this is based on what price movements we have seen so far. Now, we've also got other fundamental factors which is supporting a bullish bias. For example, if we look at the US bond yields, the 10-year Treasury yields, you can see bond yields are trading lower today. The VIX index, which is basically a risk index, was significantly higher in today's Asian session, but to be honest, it has significantly collapsed since. So we also do have certain factors, which is again providing us that bullish bias. But what we're going to do is we're going to switch over to a 5-minute time frame to see what we can take into consideration as potentially a signal. Now, if we're looking at the latest moving averages, we can see we're trading above our 250 bar exponential moving average. So that's indicating again that buyers are controlling the market. We also can see, ladies and gentlemen, that the latest crossover is an upward crossover as well. If we're looking at the RSI here is currently trading at the 66 mark. The only thing, ladies and gentlemen, which is indicating that actually potentially the price may retrace is if we're looking at the price movement, the price is actually increased to a higher swing. Whereas if we're looking at the RSI, it's actually declined to a lower swing. So we're seeing something very different. This is known as divergence. It can indicate a potential retracement. So of course, this is something we're also going to take into consideration. Now, if we are going to form a retracement, ladies and gentlemen, there's two ways we can look at it. We can say that a retracement based on the price action theory would decline at first to at least the previous high. Now, the previous swing high is here, ladies and gentlemen. So if we are going to see a medium-sized retracement, potentially based on price action, is indicating to this area here. However, if we're going to see a retracement which is slightly larger, we can potentially go to the previous low, and this is the previous low here, or we can continue to decline all the way to that 250 bar exponential moving average. This is also something we can take into consideration. Now, since we are seeing divergence, let's say, for example, we do see a retracement. So let's say, for example, it does retrace and it retraces to that previous high. So this is the previous swing high here. Let's say it does retrace to this level here. Now, if it retraces to this level, we are still technically looking at price action, which is indicating an upward price movement. Why? Because it's not a correction, it's not a bearish breakout, it is simply so far just a retracement. If it does continue to decline and it declines, for example, below the 250 exponential moving average, then that's a scenario which indicates that at the moment we're not within an active trending market. However, if we look at the scenario that is just a retracement to the previous low here, what we can potentially do is we can use Fibonacci as an indication. So Fibonacci levels based on the high and the low here, we can see it provides us the last entry point here. So this is basically indicating that it's enough upward momentum to indicate that potentially we're going to see the continuation of the trend. So if I get rid of the previous red lines, there we go. If we do see a retracement and then it continues to increase above this red line, that is something we can consider an indication of upward price movement. If we do not see a retracement and we see a breakout of this level here, then that also can be considered as a bullish breakout, which is also a very well-known signal. However, some traders would say it's better for it to retrace rather than break out straight away, because if it breaks out straight away, it may increase above the 75 level on the RSI, which is basically indicating the price is overbought. Now, let's say we get a negative announcement this afternoon from the retail sales, which is going to be released at 12:30 GMT time. And let's say we also get something negative from tomorrow's rate decision, where potentially may we take into consideration an alternative. If you're looking to take into consideration alternative, in the price, for example, if it drops below the 25 bar, the 250 bar exponential moving average, then that's a scenario that you can consider a signal that the price is going to see a complete different trend. Alternatively, you can drop the entry level slightly lower, in which case you're looking at a full correction and actually also a breakout of a bearish breakout as well. So that is also something you can take into consideration. So ladies and gentlemen, we've looked at the NASDAQ, we've confirmed the indications on both the 2-hour and also the 5-minute time frame. We've confirmed what the bias is, but we've also confirmed that potentially something different may take place. And if something different does take place, we've confirmed at which levels technical analysis signals will change and indicate downward price movements. If we aren't going to see the continuation of the upward trend as we've seen so far, we will also confirm those scenarios as well. So that's the end of today's trading session. Enjoy the rest of your day. As I always say, trade safe, trade responsibly. If you are looking to trade on either a demo account or on a real account, of course, keep in mind that we do allow traders to trade without any swap fees. I will confirm this in the link below as well, which will be in the description. In the meantime, though, enjoy the rest of your day and take care.